Hey guys, what's up? I've been thinking to record this video. Um, I'm gonna tell you that how important the market structure is. So there is no, you can say, correct definition of market structure. Market structure is just the overall view of price, how price is moving, and what you can see actually. If price is moving uh, in the downward direction, then the market structure is down. So market structure gives you a very useful insight to trade in the right direction. So talking about pound dollar, the market structure is down. So uh, there are a lot of times that people get caught into going long when the market structure is down, and that's where uh, liquidity providers and large banks manipulate people and use their emotions to fluctuate price in the opposite direction, so that more and more people will start buying, and then they will just shoot the price down. So the volume, and all those people um, who who do not spend so much time understanding market structure, they usually get caught into a wrong side of the market. So let's just try to see and see what market structure is telling into different pairs. So talking about pound dollar, see, if you see, this is monthly downtrend line, this is lower support line, and we see a support here. So if there are people who are already looking to buy here, because this seems like a support zone, right? So what they did, they moved the price down, and then it starts to go up. So they'll eat all your stop loss here, and then they eventually move price back up. So if you put a buy order here and stop loss below it, your stop loss must have eaten up here, and then they moved price bit more down to consume all your stop losses, and then price starts to move up. So this is a classical example of market structure. So see, the market structure is down, and at a support level, people will actually find opportunities to buy, right? So even if you put a buy order here, market eventually move down, and then it moved back up. So how do you tackle these situations? This is a very keen aspect of understanding market structure is. So if you see that pound dollar, if I move down to a lower time frame, let's say a daily chart, we still see the trend is down. So we might not consider buying until unless we see a clear structure. So once price entered this area and starts to move up, it failed to make a new high, new swing high. So if you see, it's still the part of downtrend. So if it's still the part of, even if you connect from here, it is still the part of downtrend. And if you can create one more line here, it gives you another insight that the trend is down. So if you really want to buy, you have to still think that once price here, what price structure is coming up here. That's a key area. If you're looking to buy, you have to still wait when the price reaches here, and then it gives you an advantage to buy at a lower time frame. That's where the key aspect is. If you see here, that's a daily chart. We do not see any bullish candle here. So there was no confirmation at all to buy, right? And if you see this structure, now it's moving into a triangle pattern. So a break towards it, it might give you an opportunity to sell. And we see that market is just, doing a horizontal movement here. So at a 4-hour chart, we do not have a clear trend. You see uptrend here, but then again market rejects that area and tries to go down. So if you see a break towards the downside, you can then look for a short opportunities. So market structure is king. That's what I'm trying to tell you, that you have to pick up the direction of a longer time frame chart. So if market structure is telling you that the trend is down, try to go down to a lower time frame and wait for a candle at a daily time frame to give you that confirmation to go long, even if you are trading against the trend. So this is a example of pound dollar. Let's see what USD CAD has to show us. So yeah, so see, this is a clear uptrend. This is a monthly view. We see a huge rejection here. Okay, so this looks like a double top, and then price is, price already moved down a bit. So it's like we do not have a clear picture on a larger time frame. So we are just waiting for price to reach at this area, give us some support here, and then we'll wait for a candle at least on a daily time frame to give us that confirmation that now buyers are interesting, and as the trend is up, you look for buying opportunity here. So if I go down to a daily or a weekly, if you see 10th June, we got a hammer here, a daily hammer. So these type of confirmation you require. So once you have a higher rejection, even if you bought here, so if I create risk to reward profile here, just hold on. So I want to enter into a long position once the candle closes. My risk is just below it, like few pips down. And if my risk to reward is 1:2, that will be a good trade. So if my risk to reward is, yeah, here. So you see, it was a clear example. You saw a daily rejection, and then you entered a long position, and then you achieved that much result. So talking about market structure, the overall trend says that USD CAD is an uptrend, and you waited for a daily confirmation, a daily hammer here, and then you entered a long position. So you entered into the right time, you waited. So patience plays the major role with market structure. Even if you know market structure and you do not have patience, and you are entering into a trade without a confirmation, you will get stuck. So again, you have to deal with that. You have to be very patient entering into the market. So let's see one more example of pound yen, sorry, dollar yen. So what monthly looks like. So yeah, so if you look at, this is a downtrend, plus we have some great support here, and we do not know what's going to happen. So we know that this is a support, and price all, see, that's what, so people will try to enter long here because this is a support line and what market structure is giving you, right? So people thought that let's enter here and let's wait for a long entry, and we will. So most of the people who entered here, price have gone down, got their stop losses hit, and then price eventually moved back up. So let's see what has happened in, see here. So you entered a long position here, price did went down, and then once you enter, so at a daily time frame, once you have that engulfing candle, even if you have entered here at the top at the completion of candle, and your risk to reward is at least 1:2, 1:2, so long position, I am entering it here. My risk is just below this candle, engulfing candle, and I have a risk to reward of 1:2, 1:2, 1:2. So this is my risk to reward. So if you see, you've already achieved that much. You've already achieved how much? You've already achieved 1:5 risk to reward, just because you had patient, you entered when daily structure gave you a confirmation. This is why market structure is important. So even if you do not have so much technical aspects, and you do not use indicators, and you are a naked price trader, you only understand price action, well and good. All you need to understand is apply patience in your strategy, trade. So as you know that at support people will gonna buy, which is right, but when to buy is what is what important is. So if you wait for a daily confirmation to give you a trade, then most of the time you will be profitable, or you will at least be at break even. Once the price starts to move up, there are risk management techniques. You can move your stop losses to break even, and then let it run into profits, and then you can use trailing stop loss to protect your profit. So these things happen. So I'm just telling you that market structure is king. So you have to understand and trade in the right direction. Do not just try to find opportunities on a lower time frame, and then try to re-enter again and again without a confirmation. That's not going to help you on a long run. So let's look at another example of AUD USD. So again, I prefer a monthly time frame first to get a clear picture. So if you see a downtrend, right? And market structure giving us a very good opportunity to go short here. But will I go short? Let's see what people have done it in past. So let me just move on a daily time frame chart. So if you see market structure is down, the right opportunity for the people is to sell. But once price starts to go up and it is showing us clear uptrend, textbook example, so it is making higher lows, higher highs, telling us that it's strong uptrend. And what people will do generally, so people will say that this is a support area, might turn into resistance. What technical analysis and what people generally will do, they'll create a support line here which is very much valid, and they will think that this is a support area which might turn into resistance because we have one resistance here. What has happened here? See, if you see, there is a lot of upside movement and downside movement. So all these people, all these market manipulators and large bank, they know that the general tendency of the people is to go short here, right? And there are people who already put short positions using this candle, which is not exactly a bearish candle, but people have gone down to a 4-hour chart or a 1-hour chart and try to find different time frame candles and try to take short positions, because on the same condition that market is trending upwards, it has time for a reversal, and market is reaching to a resistance zone, so market mild. So what they have done, they have eaten all your stop losses, and then they let market to trend in the same direction. So it was trending up and it starts to go up. Now again, we expect market to reverse because the market structure is telling us that market can reverse. So what I'm expecting now, I'm expecting for market to give me a confirmation on a daily candle. So what I'll do, if I tell you, have to write example, so I know that this is my guideline. Trend lines are not exact structures, or you can say exact places from where price to reverse, but it will give you a hint that these are the key areas. And if you look for opportunities on a daily time frame to pick up your short position, you might enter into the right side and you might enter into the profit position. So if you see, this is a resistance, and I have seen that this and this also acts like a resistance, and now market already rejected that. Then again, what market is doing, market is trying to go up because now the trend is going up, the current trend is up. So market can reach to this area, break this area, give us a false rejection, and then tries to go down again, move back down. So what we have to do here, we have to be very patient and look for these type of candles to give us clear example. So now once the market will hit this area, you wait for market to give you a bullish and bearish engulfing candle. See, even if you have hit here, market did go down, okay, and then it eventually moved back up and trading at your current area. It's now at break even, even if you have put, even if you have, so these are the things that you have to take care in mind. So when once market will go up, wait for a bearish engulfing. Even if you have entered here, you know it might move down, you were into profits, and then it went back up, and if your stop loss is here, it might hit your stop loss and again going down. So you will not be able to write all the time. But what I'm talking about is, if you understand market structure on a longer time frame chart and then at least wait for a daily candle to show up, you will be right almost 50% of the time. And once you are right more than 50% of the time, with risk to reward of 1 is to 2 and higher, you will be in profits. That's it. So you don't have to think about any other math. So yeah, so I am looking for shorting Australian dollar once it comes to that area and give us some confirmation. Okay. So what next? Yeah, see, this is the classical example, what I'm telling you about. So if you see a overall structure, a 1 week structure, so if you see that trend is down, and I am looking for short opportunities on NZD USD, but even if I place a trade, short trade here, see, market did go up, and it has now trading above the trend line, above the downtrend line. So people might enter into a long position here, which I will not suggest. So people might do like that because they think that the trend line is broken. They try to do like that, and then market can move down again into the same direction. So market can give you a false break, but if you enter a long position because you know that the trend is up, you have to again wait for a confirmation, a pullback, so that you can enter into a long position. So talking about entering a long position here, I will not suggest. The reason why the market structure is down, and I will look for short opportunities. Let me just hold on. So I will look for short opportunities in New Zealand dollar versus US dollar uh, at some this level, because I know that this might act as a resistance. So I can draw one more line here, and I know that this will be a still a part of a downward structure. So I know that this was a swing high, then another swing high, and then market can go up, make triple bottom, and then move down, which is very much possible. All I want to tell you is that I'll wait for a daily confirmation to give me some insight. See, market at the key area. This is the key area, and market is just manipulating. Market is moving down, then moving back up, and it is not the clear structure of trend broken, or we see an engulfing candle, but not that engulfing candle which breaks the previous swing. So if you see the structure, the daily structure is not that clear. So uh, it's like this, and then it's not. If this act as my previous resistance, so it I do not have this type of structure coming in. If I have this type of structure coming in, I might see that this move is an impulsive move towards downside. Then I have a pullback, and I see a rejection here, a daily confirmation, a bearish candle, and then I can take a short position. So that's what I'm saying. So if you want to take a reversal trade, if you want to go with the market structure, always wait and be patient, and let's see what market has to give you. Okay. um USD CHF, what USD CHF is telling us. So 1 week, yeah, so pretty much 1 month, 1 week, pretty much it's done. It's an hour support zone. So similar, what market can give you, market can again take your stop losses. So uh, you know that this is one area, one support area, another support area, another support area. So this kind of a triple bottom, and then market is now going back. So what market can do, what manipulators can do, they can move the price down below this area, and then it starts to move up, because we know that this is a support zone. Market can move up. Another thing that you can do is draw some kind of channel that can give you more hint what market can do. So if you see that this is one area, what market is doing it on a long run. So if I draw this channel, I know that the correction is going on, and market can reach this area, and market can breach this area also, and then starts to go up. The market structure is like that. I'm just reading what chart is telling me. So these are the things that you need to keep in mind. So if I go down on a daily time frame, what daily is showing me? So I do not have any major. uh, I can see some structure, some engulfing structure here, but that's not that much prominent. I see this hammer and then an engulfing candle. So this was a good structure to enter into a long position. And then we if you would have entered, you would have been profits, but the structure is down. You might have closed your trade here once you see the rejection, or once you have, if you're using a trailing stop loss, your trade might have closed here, but that's fine. So again, what I'm telling you is that if you want to enter a long position here and understand what market structure is, let price go here, let price give you a daily candle confirmation to enter into a long position. Um, so, market structure is very much important. Practice this as much as you can. You have to always analyze what charts are telling you, and always keep an eye on important news events. So if you talk about news events, I use Forex Factory calendar and I just filter, okay, next week, what's important. So let's filter on only high impact event, because you might not be have time to keep a track on all the events. So at least keep a track on these major events. So on 21st July, we have RBA meeting for Australia. So these are some key events if you are taking a short or long position on Australian dollar. So if you see, we have AUD USD on our charts, right? So what AUD USD was telling us. So yeah, we were trying to look to short Australian dollar, right? So this might give us some confirmation here to go short. This might go up, and then we have a negative news here, and that adds as a confirmation to go short on Australian dollar. Or this might give us some insight that what market is doing. If you're planning a short position and we have a positive impact for Australian dollar, it's also give you a hint that it's not the right time to short. So you always have to plan your trades according to the important news event. You can always track events here on Forex Factory, and that's it. So the time is hard due to this COVID-19 and all, and people are losing jobs, and it's always a good time to learn this skill and be prepared, because if you have some skill set and you make consistent money online, that'll last forever. So thank you for watching. If you have any questions, just let me know. I'll be happy to answer. Thank you so much.